revenue standards as well as step 1. So we're now going to move and we're going to look at step 2, which focuses on identifying performance obligation. We're going to look at this step in 2 separate parts, so there'll be 2 separate videos. As always with these videos, what you see on your screen is the software that we developed to help companies understand and implement requirements of the revenue standards. This can be found at tasglobal.co, and we'll be using this to help communicate what the requirements of the standards are. So the first aspect of step 2, where you're identifying performance obligations, the very first question we're being asked there is to list all the promised goods or services in the contract. The idea is that we want to capture the entire population of all promised goods and services in the contract. And once we've identified a complete population, we'll then evaluate them against the requirements of the standard to determine if they meet the requirements to be accounted for as separate performance obligations. When capturing the promised goods or services, make sure that you include all promises and all goods and services. So that includes both explicit as well as implicit. So you could have customary business practices that could also create a promised good or service in the contract. So I begin here, just for demonstration purposes, I begin to put together a simple example. So in this example, where you have a software license, we have when and if updates, technical support, as well as installation services. What you'll notice is as you begin entering the promised goods or services, the performance obligation will start to populate below for each of the promised goods or services. So let's move now to the criteria. And what you see here is the first of 2 criteria for identifying performance obligations. So here we're being asked for the following performance obligations: can the customer benefit from the good or service on its own or with resources readily available? And if you have questions about what does that mean, you can select the question mark here, and it will give you a quick summary of what the actual requirement is. So in this case, if the customer could use, consume, or sell the promised good or service for more than scrap, then it would be seen to being able to benefit from the promised good or service. If still not clear on exactly what the requirement is, you can select the I button here, and this will provide some examples as to what this means. So for purposes of our example, I'm going to go ahead and say yes for the software. I'm going to say yes for the when and if updates, yes for the tech support, but I'm going to say no for installation services. It could be a situation where the installation is significantly modifying the software, so effectively you could be saying that the software and the installation will be combined as a single performance obligation. But for all of those we said yes. We said yes, the customer can benefit from the software license, the when and if updates, the tech support, all of those promised goods and services on their own or with resources readily available. So once we've said that, we now want to move to step 2 of the second portion, I should say, of the identified performance obligation analysis. So what we're being asked here, for each of the ones that we said they could benefit from separately, for the one, the installation services, they said we could not benefit from separately, we've already determined that the installation services will not be a separate performance obligation. But for each of the ones where we said that they can benefit from separately or with goods or services that are readily available, we now move to the second aspect of the criteria. So the question is asking, is the promised good or service separately identifiable from other promises in the contract? So the the revenue standards, they focus on whether these goods or services are distinct. And to determine if they're distinct, they must meet both of these criteria. It must be that the customer can benefit from the good or service on its own or resources readily available, and it must be distinct in the context of the contract, which means that it must be separately identifiable. So once again, to understand a summary of the requirements, you can click the question mark button there, or I find the examples very useful as well when determining, okay, what does separately identifiable actually mean? So for this case here, let's say yes, the software license, separately identifiable, when and if updates are separately identifiable, and the tech support is separately identifiable. So once we've answered yes to each of those questions, we then now move to another part of the analysis, which also is focusing on identifying performance obligations, but is focusing on some specific areas of the literature. So we'll pause now and I'll include that in a separate video.